All right. So sorry about that. The live stream dropped off. I don't exactly remember where I was, so I'm going to give a brief breakdown of basically what we were discussing in the live stream. I'm just going to record this and put it out. I'm going to put it out to everybody because I was unable to get Saturday's upload out as well. So apologies to channel members. Basically, we keep a near time bias. We use a daily 21 for intraday directional bias trades, and we use a weekly 21 exponential for, more longer term or more serious corrections. We struggled to close a weekly above the 21 exponential moving average. I'm on the wrong chart, so I got confused there. But here's the weekly 21 exponential moving average. You can see that we've been playing with it for 4 weeks. And this week, depending on where it closes, will determine whether or not the slope of the moving average is up or down. In order for it to be up, you would have to close well above it. You would have to close back there up above 62,669, which is Q3 2024's open. You would have to close up in that region in order to change the slope of this 21. So now not only is the weekly below the 21 has taken a negative slope. Now it did have a negative slope based on this big move and this big move here. The closure under and this close under kept the slope going negative, but we did get a slight pop and then we're back to slope negative. So unless Bitcoin gets all the way back up to the Q3 2024's open and closes there today, this looks like we're probably going to see more downside continuation. Now, obviously, we're in a 6-month range, so I don't know that we're going to get downside continuation, but we can start to look for swing highs to hedge our positions. Basically, what I mean is we can wait for next week to open, and we can look for an area intraday, intra week to look for a potential weekly swing high, to look to set short positions, to get ready and prepared for any downside continuation that we may get. I would rather get stopped out of a hedge than not hedge and watch my Bitcoin bags go down with the price of Bitcoin. And I'm not about to do that. I'm absolutely going to hedge my bags because I want my bags to stay the same size no matter what price does. If price is going down, obviously I want my bags to grow, so I don't have hedges on while Bitcoin's extremely bullish. Now, the long-term 6-month chart looks still bullish to me. Obviously, you're still trading inside of the first half's candle, and you're still trading really close to where the first half closed even, but you still have a pretty sizable range here of downside, and that low puts you down around 49,000. So as of right now, we're under the daily 21, right? We are setting at a potential weekly support level. This is last week's support. Let me go over here and see, make sure. No, it's just weekly support. Last week's low is right there. So we could use this as last week's low and see where we close in regards to that weekly support, last week's low. But still, like I said, we'd probably be more prone to look for something like this and then look for a short and look for a downside continuation. Unless for whatever reason, and it's possible, that we get a move right back up. 100% that's possible. Nobody knows what's going to happen in the future. We know that tech is lagging the S&P 500, or we know that the NASDAQ is lagging the S&P 500. And that's because tech isn't making fresh weekly highs. Where if we go to the S&P 500, we can see that not only did we make a fresh weekly high or a fresh weekly close higher than the previous high we closed, we made a second high we closed. So the S&P 500 is a broader market rally. NVIDIA is not the only stock holding this up. We can see that by simply going into the sectors. We go into the sectors. Of course, the tech sector doesn't look as good because the tech market isn't performing as good. In financials, you can see that it is, doing quite well. That's based on pretty much one stock though. Healthcare making fresh high week closes, pretty much doing real good there. Most of your sectors are doing pretty good. We did take a long trade on XLU. I have to go back to this chart in order to show you that trade though, because we marked it here. Right here at this purple line, we got long on the XLU. That's been performing pretty good. It's a slow mover. We're only up a couple bucks, right? $3 or something like that. But I'm still holding this position to see if it wants to continue higher. I will close the position if we get back under 75.31, as I don't want to lose all of these gains. And also, I kind of need to look at the expiration. If it's a short expiration, I might just go ahead and close it, because you will lose money based on time decay, even if your option is well in the money or not. I'll just have to check that later. But anyways, that position is doing pretty good. But the rest of your sectors are doing okay. Communications up. There's just a few that are down, right? So you have a broader market rally. If we go look at value, here's the Vanguard Value ETF. It's doing very good, right? Very strong. So more people are rotating capital from growth to value, which typically is done when people are a little bit nervous, right? Value is where people run to when they're afraid of a broader market correction potentially, or there's just uncertainty out there. And we know for a fact there's a ton of uncertainty out there, so we'll be very, very careful as well. And then the Spider Value ETF doing very good as well. Value's doing good. It's outperforming growth right now. We know that for a fact. All right, so let's go over here and get your SPX levels for this week, in case you don't follow me on Twitter, because I usually post this every week on Twitter. The weekly expected move is 76 points. That puts your high weekly expected at 57.24. The low edge of your expected move, 55.72. You know, the ISM probably will cause the markets to move a little bit. We do have non-farm payrolls on Friday. So we do have some news events next week that could potentially move the markets. It's going to be a shortened trading week. Be very careful out there. It is possible that we make a fresh all-time high and roll over. It could take some time. But I just wanted to show you that the stock market, or the S&P 500, is not being held up by NVIDIA. Also, there's something to know about NVIDIA. It's not the heaviest weighting in the S&P. Apple has a heavier weighting in the S&P than NVIDIA does. And Apple, NVIDIA, and Microsoft are the three biggest companies. So it would be those three in my opinion. And Microsoft is not doing as good as Apple. And NVIDIA not doing as good as Apple. Apple's much closer to its high week close than both Microsoft and NVIDIA. But I did do a little bit of something over here on the NDX, or the NDQ. Let me pull that up real quick, and then I'll show you that, and then we'll wrap this up. So basically, here we are. You can see that before we made fresh all-time highs, when we had the bear market in 2022 and 2023, we did have this little period of risk right here that took a few weeks, and we spent, you know, a little bit of time under the 50. So that did speak to trend strength a little bit, right? You were unable to get above 60 in both the swing highs, but since they were lower, you know, you would have been more prone to be looking for bearish entries here. And then this was our last pullback, the one that we're currently coming out of right now, but the previous pullback that we had, you can see it didn't spend very much time under the 50 on the RSI at all before you were right back above there, and you even got above the 60 pretty quickly. This time is a little bit different, meaning we did spend a little bit more time under the 50 than we did in the last one, but this was a much larger drawdown in terms of percentage drawdowns. I guess we could check it. We could get pretty close to it, right? It looks like 15%. So 15% drawdown. And we did go up and we did test the 60, but we reversed and we retested the 50. So we're kind of in this like little bit of no man's land here. It does look more like a bull flag at this point than than anything else. So basically, what can we do here? Like, what can we do? Can we watch a trend line for potential bullish entries if we get a trend line break? I guess one could do that, right? You could do that maybe if you get back above the 60 on the RSI and you spend a little time up there. Then you could buy the dip if you even can get a dip. If you get a dip, you could look for buy the dip opportunities as long as the RSI is above the 60. When it's in between the 50 and the 60 like this, it doesn't really mean that you're back to bullish just yet. So you have to be a little bit cautious. So we will be cautious right through here. But there is something that you should know, right? If we go over here to the 6-month chart and we pull up the open of the second half, which would be Q3's open, you can see that near-term price action is really close to Q3's open. Q3's open is an objective price point at $19,720. So one could arguably say, since we have not spent much time, so here's when we opened Q3. We're still in Q3, mind you. We're not in Q4 yet. But while we opened Q3, we did have a nice little expansion that lasted for a little while, but then we broke down right here. So this little area of price was testing Q3 open, and then we lost it here, and that's when we got this move lower. We had a pullback, and then we shot down. Now here we are again. We're retesting this as potential resistance. So how much time have we spent above it? Not much. I see 1, 2, 3, 4 days. Well, you can say that you spent 5 days above it, but you didn't close that last daily above. You closed it right on it. You retested it here and failed, and then you got a little bit downside continuation. Friday is trading as an inside Thursday's range. So it's an inside candle. It's not an expansion candle, so we got to be very careful. But we do have non-farm payrolls next week, and that will be on Friday. The longer we spend above the 50 will start to look better for bullish continuation. But as long as we're trading under 19,720, we have to be respectful that this could indeed be resistance. Remember, Bitcoin just printed a potential bull trap. So if Bitcoin is looking a little bit on the weaker side, then we have to be very cautious moving forward. But if you're trading the Qs and you're looking for downside continuation, 19,720 is a good spot to look. It's an objective horizontal resistance. Objectively, one can argue that because price is currently under it, and it is struggling to close and maintain daily bullish continuation above it. So keep that in mind and keep that level on your watch list moving forward. If you are an intra-week, intraday trader, if you're a longer-term investor trader, you're probably looking to get bullish already because we've spent a lot of time above the 50 here, and we retested the 50 on 2 daily occasions, and both times you could not close back under it. So that does look more constructive. If we look at our moving averages, where are our moving averages? Well, they're all structured bullish for now, 100%. The 21's above the 50, 50's above the 100, 100's above the both the 200, the EMA and the simple. Now for this, when this bullish trend gets going, like if we get something over here, you're going to want to see that 200 simple get under the purple line, which right now the purple line is still above the 200, but these are 200. You need these are huge moving averages. It takes a lot of time for these two moving averages to adjust. Watch your closer, more near-term moving averages here, if you will. And then if we look at the weekly time frame, you're well above the 21. Remember, you only closed 2 weeks under on the NASDAQ. You did not close any weeklies under the weekly 21 on the S&Ps. But we did get 2 weeks under. But then we got a nice bullish reaction from that. So this 18,961 all the way up to 19,720 is going to be like a no man's land, if you will, because prices can absolutely come down here and retest the NASDAQ's 21 and go up. It can. And we got time next week, not this upcoming week, but the week after. We probably will see the FOMC and we'll probably see rate cuts. But this week we're going to get NFPs. And that's going to be important. Now, another thing to keep on note right now, the expectations are that the NFP is going to come in at 4.2, the unemployment number. That's the number that people are going to be paying more attention to. So keep an eye on the unemployment number, all right? And that's where we currently are sitting. The S&P 500 looks more bullish than bearish, but we have to be very, very careful because we do know that in the past, rate cuts have been bearish, but we're not really looking at recession just yet. So here is the S&P 500 structure. It looks bullish, looks good, right? You're pretty much right above the 60 on the S&P. So if you can continue to maintain bullish momentum above 60 on the RSI, let's go in here and fix this to 60 exactly. 50 is the number that we keep an eye open on the daily time frame for bullish day trades. But for long-term growth, we really want to see the RSI spend more time above 60 than below it. Because the more time it spends under 60 and then under 50 would suggest that we're going to see, you know, more potential downside continuation. But right now you look really, really good and constructive on the S&Ps. NASDAQ, not so much, but S&Ps you do, and Bitcoin, not so much. So take that however you will take it. Right now, we are looking for bearish entries, probably moving forward on Bitcoin until we get that weekly closure back above the weekly 21 exponential. We're not all out bearish on Bitcoin just yet. We are looking for downside hedges. We're looking to hedge out that risk, that downside risk. So hopefully you guys get something from this, and we will talk to you guys as soon as we can. Thank you so much for your time. Make sure y'all trade safe, trade smart, and as always, happy trading, everybody.